Hello, my name is Victor and welcome back to the channel. Thank you so much to everybody who reached out. I know I was struggling in my previous video, but my voice is feeling a lot better and I want to continue my analysis on Meta. If you watched my previous video on Meta, you already saw me analyze their earnings report as well as their cash flow statement. If you have not watched that video, I'll be sure to leave a link somewhere up here for you. I would highly recommend you watch that before continuing on with this video. But for those of you who are just here for the balance sheet analysis part of the video, let's go ahead and get right into it. Before that though, I just had another look at Meta's stock price right now, and they are down 14% from their all-time highs. Ever since they came out with those earnings, they have been struggling. But to be fair, Meta is not the only one. Having a look at a heat map here of the entire stock market, it seems to me like here we are midway through November and the stock market is tumbling. All right, now let's dive into this balance sheet and have a look at exactly what is going on here with Meta and why Wall Street didn't really appreciate their earnings and why they took such a tough tumble. And right off the bat, when I come in here and have a look at their cash and cash equivalents, that was down 77% compared to this time last year. Over $40 billion to now just a little over $10 billion of cash and cash equivalents on that balance sheet. Not something that Wall Street likes to see, and Mark Zuckerberg knows this. As we talked about in my previous video, in the cash flow statement, you can see that Mark Zuckerberg is absolutely focusing on growth and he is purchasing these AI chips from NVIDIA like a madman. I do not disagree with Mark Zuckerberg here because Meta's not the only company that is racing and clamoring to get their hands on these AI chips. And Meta, being known for AI, does not want to fall behind in this race. But let's keep moving on through this balance sheet. And when I had a look at their property and equipment, you can see that's where a massive jump, 32% growth compared to this time last year. And again, that's all the AI chips. They are property and equipment that Meta is going to use for, the metaverse, whether it be some other AI projects that we're not even aware of right now. But Mark Zuckerberg is buying them like hotcakes right now. And we final out the top half. And also just wanted to highlight, a balance sheet is split up between the top half being assets, the bottom part here being liabilities, and then you'll final off with your shareholder equity down at the bottom. So just in case you're new here and you're barely learning how to read a balance sheet, that's usually how it's split up. But total assets were up 10% compared to this time last year, which is great to see. When I had a look at their liabilities section, you can see that total current liabilities for the most part are virtually the same, and long-term debt is also not moving a ton. When I had a look at their total liabilities though, that is up 18% compared to last year. And I do have this number here circled in green, but I'm going to come back to that. Let's put a pin on that and we're going to keep going down the line here and we are going to go down to stockholders' equity. Again, for those of you who are new, equity is assets minus liabilities. So you want to see a positive number here anytime that you're looking at a massive company like Meta. And Meta is known for having an amazing balance sheet. They always generate so much cash flow that they can just hold on to. They're paying a dividend now, which we're going to get to later in the video. Or as they generally do, they use that money and invest it towards growth opportunities. Total stockholders' equity is up 6% compared to this time last year, and I, for one, love to see it. Now coming back to this 0.57 number that I have circled in green, and that is a specific ratio that I like to have a look at whenever I'm analyzing a company's balance sheet. The way that I calculate this number is by taking a company's total debt and dividing it by the shareholders' equity. Ideally, I like to see a number below 1 because this means that the company is doing a great job of managing their debts. Anything that's above a 2 is incredibly concerning for me unless it's going to be something like a Johnson & Johnson or something that's not really focused on growth. For me, personally, I like to see anything under a 1 is a green flag, immediately love to see it. Anything above a 2, and I start asking questions. But all in all, I would say that Meta has a great balance sheet here. They're not drowning in debt. They do have money on the balance sheet, even though it is significantly lower because of Mark Zuckerberg's spending. But in all, if I had to just give a couple of cons here for Meta, number 1 would be that the cash balance is much lower compared to this time last year, and the total liabilities are up 18% year over year. But again, Meta generates so much cash flow. They're known for growth. I'm not all that concerned about it, to be honest with you. As for pros on the balance sheet, absolutely, I want to highlight that shareholder equity up 6% year over year. The total debt divided by the shareholders' equity, that ratio is below 1, which I love to see in companies that I'm investing in, because this just shows me that they are managing their debt well. Because what good does it do you to be drowning in debt, but then you have no equity to show for it? You're taking on debts and all of these loans, but you're not utilizing it properly. And that is something as an investor that you should always keep an eye out for. Now again, I mentioned it in my previous video, Meta is now lower. The stock price is now lower compared to this time last week. And again, I am going to say that in my opinion, Meta is an absolute buy here in October, no. Why did I put October there? It's November now. I'm so sorry. I'm still in last month, and I'm probably still trying to clear out this virus, whatever I had last week. Meta is a buy in November of 2025. And if you wanted to see a higher depth description of my projections, be sure to check out my last video. But for here, just know, my bear case by the end of 2027 for Meta is for the stock price to be at $873 a share. That would be a 43% jump from today's price of $609. And as for my bull case, I have Meta above $1,000 a share by the end of 2027, and that would be a staggering 78% increase from the stock price compared to today. And that was with me being incredibly conservative with my projections. So if you want to check out all of the details, again, I'll have that previous video linked in the description below. I am incredibly bullish on Meta, as I'm sure you can tell. The growth, Mark Zuckerberg looks as hungry as ever with AI on the horizon. I mean, and I don't know about you, but every single time that I hop on social media, specifically TikTok, everybody is mentioning Meta's new glasses, and they're recording using them. I personally have been interested in purchasing a set for myself, but I need to do a little bit more research. If you have the Meta glasses, or if you've used them before, I would love to get your take. Would you recommend them? Did they feel kind of weird? I would love to get your opinion down below. Let's keep it moving here, and let's wrap up the video by discussing that not only is Meta a growth stock, but now they pay a dividend too, and I absolutely categorize them as a dividend growth company as well. As of November of 2025, Meta is paying $2.10 as an annualized dividend to shareholders. And it is fairly new. They barely started paying a dividend last year, but since then, that dividend has grown by 5%. And considering how much money that Meta makes and their amazing cash flow, I for one absolutely see that dividend growing by at least 7 to 8% here in the coming years. Just my prediction though. I'm not basing that off of any history. That's just going off of what I'm expecting. Meta's current dividend yield is 0.34%, absolutely puny. I'm telling you, they have room to grow that. They have the funds for it as well. It just depends on Mark Zuckerberg. Is he going to go all in on AI, or is he going to hit the brakes a little bit and let's focus on the shareholders a little bit? So it'll depend on his trajectory here with Meta, but my personal dividend yield is 0.59%. I have been a shareholder of Meta since 2020, and I have been a happy shareholder since. and I will continue to do so so long as the numbers look the way they do. Again, I am incredibly bullish on Meta, but do not take some guy on the internet's word for it. Like I always tell you, do your own research, come up with your own conclusions, and after you do that, I would love to get your take in the comments below. What do you make of Meta? What do you make of the stock market in general right now? It looks like things are looking a little bit shaky, but if you've been watching my channel here, you know that that is something that I expected. If you made it until this point in the video, be sure to give me a like, subscribe if you haven't already, and as always, I'll catch you in the next one. Peace.